Hi, Kate. You are kicking off tonight with the closing bell on Wall Street.
Yeah, Sharon, and oil prices have now fallen a little bit for the first time since the U.S. and Israel began launching those strikes on Saturday. From an earlier high of over $78 per barrel, U.S. WTI crude dropping below $75 per barrel. The international benchmark Brent crude above 81. The relief on energy prices trickling over into the stock markets. We saw Wall Street closing higher, the Dow Jones jumping about 200 points at the close. Tech stocks and particularly chip makers led gains there. Donald Trump has now officially nominated Kevin Warsh to replace Jerome Powell as head of the U.S. Federal Reserve. Earlier, the major European indices closed higher as well. The IBEX in Spain gaining 2.5%, despite threats that the U.S. would cut all trade ties over Spain's refusal to allow U.S. forces to use its bases for those strikes on Iran. Well, earlier on Wednesday, stock markets in South Korea plunged because of the country's reliance on oil and gas from the Middle East. The Kospi lost 12% in its worst single-day decline. Caroline Baum explains.
An eerie silence descended upon Seoul's business district Wednesday, as traders watched Korea's Kospi stock index fall by 12.06%, its biggest drop ever.
The South Korean stock market is currently experiencing a significant amount of panic. Circuit breakers and sidecars have occurred on a massive scale, leading to a seemingly uncontrollable decline.
The mass sell-off was triggered by panic about a global energy crisis following U.S.-Israeli strikes on Iran. Conflict in the region has shut down crucial shipping routes for crude oil and natural gas, notably through the Strait of Hormuz.
About 71% of South Korea's energy imports come from the Middle East, and roughly 99% of that comes through the Strait of Hormuz. South Korea currently has 21 days' worth of oil reserves, so if supply was suspended even for a month, the real economy would be completely devastated.
It's a stark departure for the Kospi, which had been on a winning streak, more than doubling over the past year. The index's meteoric rise was fueled by chip makers such as SK Hynix and Samsung. Emboldened by the AI boom, investors bought massively into the companies. But as anxieties spread over their ability to continue manufacturing amid an energy crisis, their stock prices fell on Wednesday by 9.5% and nearly 12%, respectively.
The crisis has paralyzed shipping through the Strait of Hormuz. Hundreds of ships are waiting on either side of that waterway, unable to reach ports. The cost of insuring cargo ships has now soared since the U.S. and Israel attacked Iran on Saturday, and many industry leaders have frozen their operations in the region. On Wednesday, China's Cosco, Germany's Hapag-Lloyd, and Denmark's Maersk, all shipping giants, said that they had suspended those bookings to and from a number of Gulf countries. This press release from Maersk saying the measure did not apply to Jordan and Lebanon, and that exceptions will be made for critical foodstuffs, medicine, and other essential goods. Well, there are long lines at many petrol stations across Europe as drivers fill up the tanks ahead of what they're expecting to be higher prices at the pumps. On Wednesday, Germany said it did not plan to lower taxes on petrol, as it did to cushion prices in the aftermath of Russia's invasion of Ukraine in 2022. France's finance ministry, meanwhile, has said it will meet petrol distributors on Thursday to discuss how to protect consumers from rising prices. Hugo Royer has more.
In Germany, prices at the pump have breached the €2 per litre mark for some fuels.
In the last few days, it's gone up by 20 to 25 cents. That's not acceptable.
German drivers are used to seeing petrol prices fluctuate even within the same day. But since Saturday, the spike has been sharp, with the average price per litre up 15 to 20% compared to a month ago. Prices have also started rising in France, though marginally, according to the government.
In the short term, we can expect an increase of a few cents on average in the coming days. Just a few cents. There's no risk of supply disruption. No risk because we have stocks and because we've diversified our imports.
The Economy Ministry is convening a meeting with fuel distributors and has suggested it could impose control measures to ensure any price moves remain reasonable. Although there's been no panic reaction like what happened in the wake of Russia's invasion of Ukraine in 2022, The situation in the Persian Gulf is worrying consumers around the world. In Asia, where many countries are more heavily dependent on Middle Eastern oil and fuel, the sense of urgency is even greater.
We don't produce any oil ourselves, and the international situation is becoming more serious day by day.
Myanmar's military rulers have ordered half of private cars off the road by imposing number plate-based restrictions to reduce traffic starting next week.
And one more thing to keep an eye on in the coming days. The U.S. Treasury Secretary says the Trump administration is still planning to implement a 15% tariff on all global imports. A 10% levy has been in place since last week, following the Supreme Court's decision to strike down many of the president's tariffs. Scott Bessent told CNBC the hike would likely be implemented, quote, sometime this week. Bloomberg is reporting that the European Union expects to be exempt from that higher level. The bloc has now decided to keep the ratification of its trade deal with the U.S. on hold before revisiting the situation in about 2 weeks' time. Sharon, just another element, of course, that's at play on the global trade stage.
Kate, thanks so much. Our senior business editor, Kate Moody.